This is a Stock Trading Reality Podcast, episode 82.
I'd be a bottom fisher from there on out from 2011, and I would pick bottoms that I would thought were bottoms. Well, some of them did okay, but I wouldn't sell because it didn't hit my 300% yet.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host, who strongly dislikes dancing, Clay Trader.
Yes, that's right. I'm Michael Jackson. I am not. I will slow dance, but as far as just like get out there and boot scoot and boogie and dancing around, that's just not my thing. I suffer from everybody staring at me right now, even though I know in reality, probably nobody's looking at me and everybody couldn't care less. But when I'm out there, my face warms up. I feel like everybody's staring at me. So my face turns red and it's not a good sight. So I will slow dance. But besides that, I am not a dancer. Chez, I'm thinking because I went to...
You were a dancing queen at my wedding. I can't wait till the video comes out, and I'm going to post a bunch of it all over the internet. But yeah, you were boot scooting, and no, yeah, that's true.
Yeah, on top of tables with my shirt off and all sorts. No, that's not true at all. But Chez, if I remember, you did a little bit of dancing at your wedding, right?
I definitely did dancing, but I got a little bit of grief beforehand because I'm very similar to you when we go to weddings that, I'll go out there and slow dance with Kelly, but Kelly loves to dance and stuff. And she's like, for the wedding, if you're not on the dance floor, I'm going to kill you. And I was like, okay, well, I'm going to boot scoot and scoot all over the dance floor the entire night. So yes, I was definitely out on the dance floor.
And there's always an asterisk next to I'm not a dancer. You do have to put an asterisk because if it's your wedding, I mean, it's the least you can do for your bride is to get out there and dance. So
if that's what you wanted from me, that's the least I could do. Oh yeah, no problem.
Exactly. So, sounds like we're all. I was gonna say, all us guys are the same, but that's not true. Some guys don't care at all, and they get out there. Some guys now they have a whole lot of liquid courage out there, but
this is true.
Other guys they could be as sober as a piece of bread. I just totally made that up, and they'd be totally they'd be out there. So. But I myself, and as we just learned, Chez, not the biggest dancers. So don't send us a message saying, hey, will you come dance for us? That's not going to happen.
Clay's actually going to be on Dancing with the Stars next season. We just didn't want to spoil it.
Yeah, oh, great. Now ABC is going to sue us into the Stone Age because you just broke the non-disclosure. Anyway, if you believe that, then you probably believe. Never mind. I'm not going to go down that path about video charts and the curse or anything. But we have an awesome interview today. We are talking with Jon in the chat room. He goes by ttJon, and he's somewhat of a newer member, but he's very appreciated, and in the sense of he's very open and honest. In fact, and we touched on this in the interview, but he had a pretty crappy trade, and I don't know if it was the first thing he did, but he sent me an email. Hey, I'd love to talk about it either on the podcast or anything. And I said, well, why don't we just hear your journey on the podcast? But then for the live webinar tonight, for Clay Trading University students, I'd love to interview in depth and in detail about that trade. So, that's what I mean. That's the type of guy he is. He's not going to hide behind a loss. He's now wants to share it with people so that others can learn from it. So, and with that, he's very open and honest about many other aspects of his journey and what he's been through, where he wants to go, where he currently is. So it's a solid interview, a lot of good stuff going on. So let's just get into it and talk with Jon. Well, hey, Jon, welcome to the show.
Well, thank you, Clay. I'm glad to be here and be part of the CTU member.
Well, it's a pleasure to have you. We know that your schedule's kind of hectic, and you're also going to be on the webinar tonight, right? Is that still the plan?
Yes, that is still the plan. I've set a block of time out for that, so Excellent. We're good to go.
Part of the Clay Trader University, sometimes we'll interview fellow members, and Jon is a kind enough guy where he made a mistake on a trade, and he said, hey, I'd love to share it so other people can learn from it, and I'm all for people that want to be transparent and teach others from their mistakes. So that is the plan tonight. We're going to be interviewing Jon, so I guess that's a little plug. If you want to join us, well, it'll be too late by the time you hear this, but that's just a little kind of taste of what happens with the Clay Trading University. So tonight, in other words, me and Jon, we're going to be talking a lot today. But let's get right in with you, John. What got you started in the market? What got you interested? And kind of just where was your first step?
Well, I've always been interested in market basically since the high school. Econ teacher, you know how that starts out. And then in college, I went to school and studied business. And I ended up changing my major halfway through because it just didn't quite fit into my personality at the time. So I had took a finance class, and we always did the stock market. And we did a contest like everybody else seems to do. It's just that we were throwing darts and we had picks. So you had to, the top 5 got, so many bonus points if you beat the darts. And there's only 3 of us out there that beat the darts. So you get the darts at the Wall Street Journal, and you would take that stock price, and for the next week, you would throw it again, and at that selling point at that next week was that if you were either up or down on the darts. So there's only 3 people that actually beat the darts.
So you yourself threw the darts?
Well, there was someone was picked every week to throw the darts.
Okay, and then the idea was your group or your team had to beat wherever the dart had landed?
Yep. And there was only 3 of us actually in the whole class.
I really like that teacher and kind of that style about beating the darts. That's pretty cool. So yeah, I guess I'm sure Clay's probably heading this way too, is how did you go about picking your picks versus the darts? What were you looking for specifically at that time?
Well, we were all got to pick from the Wall Street Journal at that time. And you could pick anything you wanted at that time. So I don't remember what I picked, but I came in like 5th or 6th out of the class for that semester. And I think the guy that won just picked one stock, Microsoft, because this was in the mid-'90s, early 90s.
Okay.
So, I mean, if that tells you anything, tech was just taking off.
Right, so. Right. But, I mean, do you remember how you arrived at your stock that you ultimately chose? Was it because you read some headline, or was it because, what was the strategy you were using? Or did you have a little secret dart that you were just throwing at the board?
No, my strategy was I picked the 3 or 4 names that I knew. Like Ford and GM, and which they were doing well in the early 90s, and Disney at the time. So, ones that I was familiar with, that's what I picked.
Okay, and it's you beat the dart, right? Is that what you said? You ultimately did pretty well?
No, I didn't beat the darts. Only 3 of us in the class beat the darts. I was not in the top 3, so.
So, in other words, the dart was pretty powerful from what I've.
Yeah, because it reset every week. You could reset every week too, but it would always sell every week no matter what.
Gotcha.
So it reset, you might say, every week.
Okay. So that is definitely a new twist. You're right, you're absolutely right, and you say a lot of people get interested in the market because some sort of teacher in school, played kind of the stock game, but we have never ever had a dart involved. So definitely props to your teacher for kind of spicing up that challenge. So you take the challenge. Or I should say, you take that class, which has the challenge a part of it, that piques your interest a little bit. So, did you go out and open up an account there, or did some time pass before you kind of ultimately decided to try to step in, or where did things go from there?
This was in the early 90s, so it wasn't quite like you'd have to go down to your broker, $120 turnaround, on one trade. So no, that wasn't an option. Plus, I was, a starving student at the time, so that didn't matter. So, I mean, you didn't have $2 to trade with anything.
Right. You were living on mac and cheese and ramen noodles or whatever. But so you kind of just made a mental note. The market, that seems pretty interesting. So, fast forward to, when did you finally start to get interested in the market again to the point where you could actually afford, to put some money into the markets?
Well, back in when I got married, when our jobs started getting security, you had to pick your mutual funds. And so when we started to get a little bit more money, I put in more money in some different mutual funds, which actually some of them did really well. Some of them didn't do so well, but as like everybody else, that's how your first actual trading introduction goes. My trading account, I didn't start that until 2011. But that was only after. This is a very good point or learning lesson for everybody. This is only after I had no debt, had a very large cushion to, safety cushion. And this was just strictly play money. So, I mean, if I lost it all, it wasn't going to hurt me at all. So, I mean, it was, departmentalized from all my other accounts. So, I mean, didn't have to rely on that for making my living, paying my bills. So, I mean, you could say it was throwaway money or play money, but it was real money. So you had to realize that as well.
And that's a super good point for the listeners to listen to, just like you had kind of prefaced, is that, this money had no impact bearing on your life. You guys aren't going to go back to living on mac and cheese and ramen for you, your wife, and your children, anything like that. This was money that you had strictly set aside. It's just there for you to kind of see what you can do with it. Obviously it's not there for play money and to kind of burn, but at the same time, if the worst thing was to happen to it, you guys will still be living. So that's a great point for kind of listeners to take. But I want to backtrack a little bit. Were you the type of person that, picked your mutual funds and then checked on them every day like some people do? Because some people kind of look at those mutual funds like they're actually kind of day trading them. We had some other podcast guests who did that, or did you just kind of set it and forget it and kind of let it go?
Well, originally I'd set it and forget it, and then it would, I'd look at it quarterly. But the hours I worked, there was just no way I could check it every day. So, I mean, it was, you get home and I may be able to check it on 56K modem back then. So it wasn't like, you dial up like you do now, you check it from your phone. So it's totally different now than what it used to be.
Do you think if it was like it is nowadays, you think you would have checked it a lot more often, or did you just kind of accept the fact that, well, this is long-term investing, so I'm not supposed to be, I'll check it when my quarterly statement shows up?
Well, let's go back a minute. There's different type of accounts that I have. There's investments accounts, my retirement accounts, and then there's my trade accounts. So I don't check on my investment accounts daily, and I don't, on my retirement accounts, I don't check on those daily as well. I check on those quarterly, or if I think the market is turning, I'll go ahead and move and check those. So on those type of accounts, but like on my trade accounts, I'll check those daily and hourly sometimes. It depends on my schedule on what that particular day that is.
Okay. But back at this point in your journey, you didn't have a trade account, did you?
No, I didn't open up that trade account until 2011. And I would just pick one or two stocks, and I would let them ride for months.
Okay. So you're totally just in investor's mindset at this point in time in terms of, so what happened? Obviously 2011, you said that's when you opened up your quote unquote trade account, but from, you picking those mutual funds and all that, what eventually happened that piqued your interest enough to say, hey, what's up with this trading stuff? Maybe I should even open up a trading account. I mean, were you just stumbling around online, or what made you transition from the investing mindset to maybe wanting to get a little bit more active?
Well, this is what transitioned that during the period of paying down all of our debts and getting totally out of debt and getting that cushion. My wife and I in her company, she got into a stock purchase plan, and that paid off extremely well. And so when we sold all that got my interest sparked. So after about 2 years after that, that's when I opened up that account. That's what really sparked it, because I have a business minor, but I have a chemistry degree. So that transition, it took a while for it to come back in, you might say.
Okay. But like you said, that program did very well. So were you kind of just like dumbfounded, but like, wow, I can't believe that all worked out that way? Is that kind of what sparked it?
No, that's not how it went at all. We got the stock options, and it was the company at that time was really pushing the stock. And you look back now, and it's just kind of like an Enron waiting to happen. But it didn't happen before we got out, thank goodness. So the stock, I think we got the options at $35. And by the time we were getting out, it was at $55. And then in that time that they got vested and you could take them out, it dropped from $55 back down to $32. And then the company caught a bid. And I got the news before the wire got the news, and it jumped from 35 back to 65, and I sold as soon as it hit 65. So we got out, and as soon as the news hit the wire, 2 hours later, they reneged on the bid, and so it went from 65 back down to 25 within a matter of hours.
Big board pump and dump. We've seen it before, but holy cow, is that crazy?
It was a big one. It was huge. And that stock now I think is trading at $6 now, $7, and it was at 65. And that's a big board.
Whew. All I know is I'm a little motion sickness right now after that. So, yeah, wow. That is what we'd call a roller coaster. So, kind of a
and
wow.
By the way, that was my first trade in my trade account because I saw it go from 65 all the way down to what did I get to? I got it at $4, and I sold it at $12.
Yeah,
so that was my first trade in my trading account because I knew it was a piece of junk, but the market would see that it's worth more than $4. So that's, but I had to hold it, I think, for 2 years for it to go all the way back up to.
So it was more so kind of a swing trade as opposed to.
Yeah, it was a long, sweet trade.
Yeah. So, well, I mean, talk about kind of throwing yourself into the frying pan in terms of introductory trade. So, well, let me ask this. So you're holding this one for 2 years, but you have this trading account. Were you doing any other trading during that 2 years while you held that one, or were you just flat out waiting for that stock to kind of do its thing?
I was waiting for it to mature, and I wouldn't say this is fool's gold like we talked about before in other podcasts, but this is what you would say. It set the mindset that I've been trying to break for a long time, and I'm just now starting to finally let it go because it went from $4 to $12. So, 300% gain is pretty good. So I'd be a bottom fisher from there on out from 2011, and I would pick bottoms that I would thought were bottoms. Well, some of them did okay, but I wouldn't sell because it didn't hit my 300% yet.
Yep, you're conditioned to get the 300% as the norm now, so that's the least you're willing to settle for.
So that's my bar. It was 300%. So I look back at my trades,
man,
and I mean I'd be up 20, 30%, never took any profit, and next thing you know, this is because I listened to some crazy guy on TV that says don't ever put a stop loss in. That's a mistake, huge mistake. So if I look back now, and if I just have been disciplined, put a stop loss in, I'd be so far ahead.
Hindsight. But that's funny though, because I'll be honest. Even listening to that, I eat 300%, which is a great score, and then you're saying I'd be up 20, 30%, and I caught myself thinking, well, that's kind of weak. Like 300, that's not even close to 300%. But still, it's like, wait, snap out of it, Clay. 20 to 30%, that's insane. So I mean, that's crazy, but that's. The way, that's tricky. Wasn't necessarily fool's gold. It was more so, I don't know what kind of gold that would be, but it just totally clouded.
Conditioning gold's what I call it.
Yeah, it is. It conditions you
thinking the 300% is a norm.
Yeah, and to think that 20 to 30%, that sounds so terrible compared to 300%, but kind of you got to smack yourself back in reality. That's still a super good return. And the analogy we always like to use around here is, walk into your local bank and be like, hey, I need 30% in the next week or 2 weeks or a month. And they're going to look at you like you're the biggest crazy person ever because nothing pays 30% in, a week or a month or whatever. But so that's pretty funny. So, and I also
mutual fund managers would just love to have that kind of.
Absolutely.
They would more than love. They would physically kill someone if they could to get that kind of return.
Yeah, on a weekly basis. And I mean, I looked back at some of these. I've had some huge losses in that account, which I've almost blown that account out, but never did. But if I just had that stop loss in, because I was waiting for that 300% return.
And that's so because you made the comment, you became a bottom feeder. You wanted to find the ones that were the bottom, and sure, I'm sure you got some that were the bottom. But I mean, at what point did you finally say, okay, I guess this wasn't the bottom? Or I mean, where was your psychology at this point in time? Did you just hold these things until the entire ship went down, or did you finally, reach a point where you waved the white flag? I mean, how did these plays that weren't the bottom ultimately play out for you?
Well, they after a while, I don't know, after a week, and they still didn't go up. Basically, they would lose 10, 15%. Then I would start cutting them. But that was usually, I look back now, my worst trades, this was such a learning point for me a couple years back. My worst out of all my trades, where I've lost, almost blown my account, didn't come from so much the bottom feeders, but a few of those were, some, not bad, they were, some bad losses, but were the ones I got from tips. A tip from somebody.
That's generally how it goes.
And those were my worst blowout trades out of all of them. I mean, those were almost half accounts on some of those trades. So I learned my lesson,
I'm curious, and I don't know the answer to this, so I'm just asking so I guess this is kind of an open-ended question to both of you, but why do you think that was? Why do you think that your tip ones were the worst?
Because I bought too far up in momentum. And so when you buy that high up on the momentum, I'm gonna give you an example. I'm looking at one now, and I'm sure you guys got. I lost some money on this one, but I'm sure you guys received that money, so I'm glad you guys did. But which Royal Energy or Fuel Cell or Plug Power.
Fuel Cell, that was FCEL, right?
Plug, classic Plug.
And I think it's did a reverse split since then, but that Fuel Cell, I bought some of that at like $8 when my friend told me to get in because it's going to the moon. And so I bought it that morning, waited an hour, and looked at it, and I'm up $4 on it, and I'm waiting. Okay, I'm waiting for it to go $24, and I'm going to get out. So I actually put a stop loss on this because it was moving so fast. So I put my stop loss in at $12. And I leave it and I go to bed, get up and go up and check. Well, it had been halted a couple times that day. But the last time it got halted, it opened up like at $3.
Oof. So,
I mean, that about blew my account out. So,
yikes. And that's just the way halts go sometimes. We know why it's there and what they try to accomplish, but all it does is just make it a clamoring of, it's just a clown show at that point. But I want to loop back a little bit here, and I want Clay to kind of weigh in as well. The fact that you said you would usually wait about a week and, sometimes the stock would drop 10, 20, 30%, whatever it was, in that kind of sense, you actually did have kind of a time stop. Is that kind of fair to say? If they weren't moving at all, you wouldn't just hold them for, multiple years and just keep adding them to your account. So in a certain way, you kind of had a stop loss in place. It's just not a monetary one. It was a time one. You wanted your money to work for you.
Right. I would give it a couple of weeks sometimes. And then if it didn't, I'd cut it loose. And sometimes I would see that it was just like 3 or 4 red days in a row, and then I'd cut it.
Okay. So, but I want to do another loop and talk about this whole tip thing, because that's, now that you answered it, John, that it makes perfect sense. These tips, and I'm now talking in general. I mean, you think about, where does a tip come from? Well, a tip comes from somebody you usually know. But why are they giving you this tip? Well, there's really kind of 2 reasons, and this is a generalization, but I think it's true probably the majority of the time. The first time is in John's case where, hey, this stock is running, everything's going great, it's booming, it can do no wrong, it just goes up and up and up. So, hey, John, you got to buy insert ticker symbol here because this thing is a monster. So to John's point, as you already said, so he would buy, but he bought way too high up into the momentum. So there's one nasty way tips usually come about is, why is this person even recommending this stock? Yeah, I mean, unless it's Warren Buffett, I'm assuming that this is not some sort of like move that's way into the future of the bigger movement. And then the other, I think it would be, oh crap, I'm in this stock and it's going down, but I'm a believer, so it's got to eventually bounce. So then you're throwing tips at people. Yeah, this stock's really beat up. Well, maybe it's just beat up because it's a piece of crap and it's just going to keep falling. So, that's interesting. A point there, John, on the reason the tip stocks were the worst was, they probably were coming to you way too far into the moves, and you really just never had a chance. So I guess moral of the story there, be very, very careful if somebody's giving you a tip, and check out the chart first. And if you don't even know how to read a chart or anything, well, maybe go out and learn how to read a chart, because that would probably be a good starting point. So
I didn't even look at the chart. he just told me to get in. I just jumped in because he's got in at $2. He got, my buddy got in at $2 and told me to buy at $8. Said it's going to the moon.
Yeah. He's already on the moon.
Like a bandit. He sold out like 16 that day.
It's well on its way to Mars at that point. It's way past the moon.
Yeah, he doesn't care. He's in it too. So, but I don't blame John. I laugh just because I can totally relate. Because hey, if you're getting a tip from a friend or family or your dog's uncle's neighbor, I mean, if you trust that person, then I guess you're going to go with it. So, but yeah, the good old fashioned stock tip. Go ahead, John.
That's just getting you up to about 2012.
Yeah, so let's just keep going because this is getting good. So it's 2012. You're pretty much back and forth.
I've lost some decent, about half that account. Okay, so I'm thinking I don't know what I'm doing. I got a better idea. I had found a hedge fund manager to take over one of my retirement accounts.
Was he in Nigeria?
401ks.
It wasn't in Somalia, was he?
Yeah, it wasn't in Nigeria.
No.
Okay.
No, he's very well known. I won't give his name. He no longer trades. So I give him one of our 401k accounts, our old ones. He takes it. So I interview him. He tells me how all of his what his trade style is, his trade plan is, and all that sounds great. And he goes, I'll send you every trade I do, and you can follow them, and you can learn. So before I sent him my the trade account, I had bought Goldman Sachs at $85. And my trade account was full of Goldman Sachs. I had 50 shares of that Goldman Sachs at $85. What is it now? 165 or 68 now?
I was going to say it's a lot more
it's
than
way
$85.
Up there.
Yeah.
So this was back in like 2012. So I sent him that. First thing he does is sell all my Goldman Sachs stock in there. And then he starts trading it. So after 2 years, he takes 66% of the profit.
66%?
Only 66. He did me a favor by taking
nice.
66. And so he goes, all right, I'm done. Basically says, all right, I'm done now. I'm retiring. Here's your trade account back. And so that brings me up to about middle of 2014. So he had it for a little over 2 years and siphoned 66% of the profit off of the 401k. So I learned my lesson from there. So now it's dropped in my lap about mid 2014.
So is it safe to say that you've never had anybody else trade your account since then? If
I will never let anybody else touch my accounts again.
Talk about a good risk. Yeah, talk about a good risk versus reward for that guy. I mean, my risk is nothing because it's somebody else's money, but my reward is if I do well, I make 67%.
I was going to say it's like always being in CEO mode with fees and anything else they're going to add on top of it. So yeah, it's a pretty good risk reward for sure.
But I knew something wasn't quite right. That first Christmas, we got this $200 or $300 gift basket in the mail from him, and I'm like, well, how can he afford that $200 or $300 gift basket to all of his clients? Well, now I know. However, I wish now I just would have took that account back after that.
Well, like you said, he handed it back to you. This is about 2014. So what is your next step from here? Because at this point, you had been hands off, if I'm understanding things correctly. So, I mean, where exactly did you go from that point?
So in these trade accounts, I only played at mutual funds and ETFs. And so I was pretty decent at looking out for the turns in the market at this time. I've missed some big downturns. And the one that I did not miss was back in January. I did not see that one coming. However, so I just would leave it in 3 times ETFs. But when a market turns, it turns quick on those 3-time ETFs.
Getting those 300% returns that you like so much.
Yeah, the returns are great up until the market goes flat, and then it nittle away. But when the market turns, it turns 3 to 4 times as much.
Good old ETF decay.
Yep. So I've learned my lesson from there, and I'm now in those retirement accounts, I do nothing but pick good companies that have a.
So I can already foresee. I can foresee all the questions coming in for this podcast already. You talking about being able to identify the market turning. I want to kind of quantify that into how do you specifically spot that? Is there any, are you looking for moving averages, or is it just kind of a gut feel that you think we've gone too far one direction and it's time to turn?
I think it's darts.
Darts is a good one. However, there's a few economists out there that have been pretty decent on, saying, hey, well, this could be a downturn. You've had so many days up. Sometimes you'll get to the 21 EMA crossover, and that would be a good sign. If you get 2 or 3 of those in a short amount of time, that is crossover. But when you get all 3 of them in a short amount of time, give you a sell signal, that's a pretty good indication that the market's going to go south for a little bit. So you kind of watch out for that. So I've done good, but back in January, it did not seem to work. They just all turned at once and just head south.
So, and that's, I'm glad. Thank you for, not trying to sit here and be like, and I've seen every single market turn, which just goes to what he missed January. Again, thank you for, just disclosing that, which just shows there is no like holy grail system. So,
there's a few.
Holy grail systems.
I'll sell you it per month too as well. Let's go.
I don't mean to offend anybody, but the 2000, the 99 or 2000, the March of, the turn of 99 or 2000, that was foreseeable. The 2008 one was foreseeable, but it was not foreseeable by how far it was going to go. We got a huge downturn on that one. And then we had the flash crash of 2010. That was not foreseeable. And the Britain exit, that was foreseeable. And I know everyone thought, well, that wasn't going to happen. But if you went back and you looked at the Twitter stats on that, it was going to happen. So, I mean, that's what I followed on those is back in 99, you had that turnover from everybody doing, increasing their IT support and their spending all the way up to 2009, getting ready for Y2K. And then at Y2K, they were cutting it off. So that next quarter, exactly what happened in the next quarter, there was no more spending. So that was going to tank. And I'm surprised that some of the big guys did not see that one coming. I mean, I was a nobody. I didn't have any money in market because I didn't have 2 pennies in my name still. So, but my sister came over from Germany with her boyfriend, and they worked for Lucent Technology. And they were buying as much stock as they could get a hold of from Lucent. So she had her entire life savings in Lucent Technology. Comes over in 99. But I told her, you got to get out because it's going to crash. And her boyfriend said, no, we're going to make a killing on this. Well, they didn't do so well.
Yeah,
which is sad. A lot of people got hurt.
Yeah, but I think we can all agree here that nobody knows what's going to happen every single time. Sure, you can forecast things, but there's no such thing as a system that's going to be like, if this, that, and the other happens, then the outcome is for sure going to happen like that. Because, if that's how the market truly worked, then it wouldn't work anymore. I mean, there's got to be unpredictableness in the market, because that's what makes it a free trading market in the first place. So, sure, I mean, we're traders. We believe that there's high probability setups, but even a high probability setup is not going to be guaranteed to work because, hey, you just never quite know. But and the other thing is, well, I like the housing because I was actually a part of the market there. Yeah, looking at that and how it all came together. Okay, I would agree that that was pretty kind of easy to see coming. But all right, it's coming, but the $1 million question is, well, when exactly? Because if you think it's coming and you short too soon, well, you're still going to get roasted. So the when question's always, that's going to be the one that is putting money in people's pockets. Because I mean, it's easy to make a blanket statement. Yeah, the markets are going to crash because there's cheap money everywhere. Okay, well, when exactly is that crash going to happen? So Big Short, good movie. If anybody's not seen it, so all right. So
we sold our house in October of 2007. And we missed that whole. Our house has sold 2 or 3 times since we've sold it. Used to change hands, and none of them have sold it more than what we did back in 2007.
I was going to say 2007. You basically were standing at the mountaintop. So fantastic. Yeah, that's as good as timing. And then I started buying real estate in 2010. So yeah, 3 years later and I didn't quite hit the bottom, but there was plenty of blood in the streets at that point. But anyways, this is not a real estate podcast. So I don't know, where are we at now in your journey? Are we at about 2015?
About 2012. 2014, I get my portfolio back.
Okay, yeah, we went on a big tangent there, but we love tangents on the show. So you get your account back. Where do you go from there?
So, I mean, I'm not making any leeway at all. I mean, I'm just trading even on that. Basically, I would make some big gains, have some big losses, big gains, big losses. It's been like that for a while. But then I just leave it all in cash until I figured out how to start trading again. But it's not so much that I've done some decent time decent gains in my retirement account, but my trading account is what's changed. My trading account has just dwindled away. And I still cannot figure out why I'm not, progressing anymore. Well, the market's kind of been stagnant since 2014. So I'm trading a lot of ETFs in the market. Well, yes, you can do great on the UWTI or the DWTI during the oil thing, which I've done okay. See, so I would make my gains and I make my losses. However, I'm 5 years out from retirement, and my biggest issue that I want is I want to retire in 5 years, and so I want to make this little hobby I have, you might say, into a business. And MGT was the turning point.
Here we go.
MGT.
And you know which one that one is. I think all of us made a killing on that one. I wasn't part of the CTU then, but that was my turning point back in May. And I'd say that because that was a trade plan. I had a trade plan for it. That night, I read an article about mobile security, and it's just, I don't know if it's coincidence or what, but MGT popped up on my scans that morning, and it was at $1.50 trading. I saw where the volume came in on that one and thought, all right, I threw every dime I had into that MGT because the volume was just coming in that morning. And then I ended up selling it like $4.75 3 days later. So I did that, basically paid for all my losses, and it upgraded my laptop so I can run Thinkorswim. Thinkorswim would not run on a 2006 laptop. So does that tell you how far?
Is it fair to say though that if that article you read was wrong, and the price kept on going down, that your whole account would have been shot then? Because it sounds like you went big or go home.
I knew exactly what that was. I knew that was a pump and dump because it was a penny stock 2 days before. It was a classic pump and dump. And after I've taken your penny stock survival guide, I now understand totally what it is, what it's all about. So that's just a strictly pump and dump.
So, but at that time when you were throwing your whole account into it, did you know it was a pump and dump there, or did you believe it? Oh, okay, you did know.
No, I knew it was a pump and dump, but you can still play the pump and dumps.
Oh yeah, okay, all right. I thought
I was gonna make some money, but no, I didn't. There was no way I was thinking this thing going to $15-20.
Okay, all right.
I thought
that's the fine line that a lot of people have trouble kind of, staying on. It's like a tightrope act of what you believe in and, just trading the chart. So kudos to you for understanding that, you're just trading the chart here. You understand that, this is a pump and dump and you're on the front side of it. So you're going to ride it until, you need to. So good job on that. And not, like you said, becoming your friend, giving a hot stock pick at MGT at, $5, expecting it to go to 50. So yeah, good job on that.
I thought he read the article and had no idea that a pump and dump was going on and bleed fully in the article, so therefore just threw his entire account in there. But that makes sense now. You knew what was going on, so you were taking advantage of the opportunity, not flat out drinking Kool-Aid and blindly. So I feel much better now. For a second there, I was getting a little nervous, but now it makes sense. I just misunderstood the context of.
Well, I mean, if you look back on that trade, you had MGT, which was it was a capital investment. I would so-called capital investment type of business. And then you go from mobile to security all in 1 week. And then that article comes out about mobile security and about John McAfee wanting to turn this into the best mobile security device, security out there. And all of a sudden that stock goes from pennies all the way up to $1.50. You just knew it was a pump and dump. And you see a lot of these now. Sophia Bio is one of them too, by the way. My friend just got burnt on that one. How CEOs want to get it up above $5, and then next thing you know, they'll keep it up above $5 for however long they can, and then they'll go ahead and they'll do a reissue of stock. and next thing you know, the stock drops below $2 or $3. So that burns a lot of people.
Yeah, pump and dumps. Well,
and stock issues.
Yeah, that's a normal part of the markets. But the key, like Ches said, good analogy, Ches, is it's kind of like walking that tightrope. You got to make sure that you know what exactly is going on, because if you lean one way or the other, you can get burnt pretty bad. So MGT, we definitely certainly remember that one. I think I did a video chart on that like 3 weeks in a row. But that thing was a monster. As you said, it paid for all your losses. It got your laptop upgraded. So now you're sitting there with all your losses taken care of, a new laptop. Where did you go from that point?
Okay, so now my trade account's back up to where it was, and I'm thinking, okay, I'm good at this. I can pick some more. So I start researching and picking more, but I'm using stop losses, much tighter stop losses, and being more disciplined about it. And so I get stopped out a lot, which is okay, but I'm still not progressing. So now I'm starting to give back most of my gains out of that account. And that's when I stopped. When I gave up about 40 to 50% of those gains and what was left in that account, because I realized that at that point that I got to do something. That could have been just a blind squirrel getting a nut with that MGT, but I had to figure something out. But I have two good friends at work, and both of them trade daily as well. One of them makes a killing, but he never keeps it. The other one does pretty good, but he keeps all his money. Well, he understands stocks or stock charts and technical analysis.
Yeah, I like this guy.
And so we were talking, and he's like, I buy it here, and I put my stop loss here, and when that flag pattern comes out, and I see a ascending triangle, and I'm like, what is all this stuff? Says,
that's a friend in clay right there.
Yeah, I want to buy this guy a $300 fruit basket. It's what I want to do.
I go, who's teaching you all this garbage? He says, you can't make any sense out of that. You got to use fundamentals. You got to use your gut on some of this stuff and where it's going. He's like, no, it works. And he showed me some more of what he's done, and he goes, my father-in-law has taught me all this stuff for the last couple of years. And I go, your father-in-law? This is why he's like, he goes, yeah, he wants me and my wife to be taken care of later. Didn't want to do it, which is understandable. So he's like, okay. So I'm like, I'm still confused. And it just happened a week or two later. I'd stopped trading. And after that, a week or two later, I came across, I was searching the internet of, where to go to learn this stuff. Oh, that's a rabbit hole you don't want to go down.
We know that. Oh, do we know that?
Yeah.
So the pop-ups on the screens just going off, buy my course, buy this course, you're going to make millions. Some guy standing in front of a Lamborghini, just all you have to do is spend 10 grand on this course and you're set. And I knew that was a big scam. But I came across your video on YouTube. It was one of those recommendations. I didn't even search for you. It was just a recommendation. And when I came across that video, it clicked for me right there, because you were doing this day trading and making a living at it. And
do you know what video it was? Was it a live trade video, or was it?
It was a live trade video.
Okay.
But that's when it clicked for me right there. I'm going to turn this little side hobby into my business in 5 years when I retire. So I have 5 years to get this up and going, to get this business up and going, and turn it into, because I don't want it for the money. The money is not an issue. I want it for the time. I want my time back. So that's what I'm looking for in 5 years. I want my time back. So I realized, Clay, you're not doing this so much for the money. You need the money for your lifestyle, for your time. And that's where it clicked, that video. It just kind of all clicked at once. Your video, you work your tail off for 3 or 4 hours a day. I know it's more than that, but you know what I'm saying, actively. And then that's the lifestyle I'm wanting, even though I know it's more than that. But I did not realize that this other rabbit hole, when you start learning this stuff, the time commitment that it takes for you to learn all of it's just huge. But let me get you, this is interesting. Your courses, I'm the type of guy, I'm just as tight you might say is Clay is about saving $1. There's no way in heck I wanted to spend $2,000 on your course. So I'm looking at your courses, other courses, but I went back to your trade video and I watched it. And it's what got me with your trade video was I knew what kind of guy you were. Was you had your daughter came into the room while you were doing a live trade or taping a trade video. And that point there, the interaction you had with your daughter is how I knew what kind of guy you were, and I knew I would buy your course because I have
when
young
he started
children.
barking at her and saying, "Get out of here! I'm trying to
He
make
did
$1
not
million
open the
bucks."
window and yell at the kids on the lawn at all.
I just sprinkled that yesterday.
It was a constructive, loving father interaction during that moment. So how you interact off of the camera was more important than what you did on the camera.
Interesting.
So keep that in mind. It showed me what kind of guy you are. So it made me come back around and look at your $2,000 course. Well, if I bought all of it, I got access to all this. And because I was reading through your descriptions on your courses. And, I could learn that. I can learn that. Yeah, that's how that would work. And so that's when I was like, okay, well, I'll just buy it all and jump on in. But before I made that purchase, I thought, okay, I'm going to go check out your resale value. And this is where, if you do your due diligence, you find out if your courses actually work. Some of the guys that have $10,000, $12,000 courses out there on the internet, they have resale values on them. Well, your resale values, there's not one out there. You can't go to eBay and buy your course. Well, so you can go to eBay and buy someone else's course for a fraction of what they paid for it. So that showed me, well, there's no resale value on your course. That means you must have some pretty satisfied clients. So they're not coming back, stabbing you in the back, trying to resell your product. So that's when I jumped in. And bought it.
That's valuable data there, Chaz, for us from a business perspective.
It really is.
Yeah, so that's interesting stuff. And for anybody that's new listener, whether you believe it or not, I guess there's nothing we can do to convince you, but this is our first time talking with John. So it's literally like Ches and I sitting down and we're just talking. So that's some valuable information. So yeah, thank you for sharing that. Thank you for taking that leap of faith. And now, like I said, full circle, you're going to be on the webinar tonight, sharing with other members of the Clay Trader University program. And, we're all going to learn together. So that's great. That's awesome. So where do you stand right now in your trading? Are you paper trading right now? Are you trading with real money? What are you trading? Stocks, options? Kind of bring us up to date where things stand present time.
Well, there's a few things that are wrong with paper trading. Thinkorswim's got a great platform for that part. However, it's on a delay. So I'd make some great trades on that platform, but when you go to practice, they didn't quite pan out. So, plus, I had always the fear of missing out, and that is hard to overcome.
Yes, it is.
The more you trade, the more you realize there's a ton of opportunities out there. I can't even manage the ones I have on, let alone watch the ones that are coming up. So I just let that go, the fear of missing out go. And so I was able to think more clearly now on my trades. And so one of the things with Thinkorswim is the delay. And another thing is it does not control your emotions when you're paper trade. And more importantly, when you tell your wife how much money you just made in your paper account, that doesn't go over so well. Because she wants to know, why didn't you go ahead and make it in your real account and get us some money? So I learned not to tell her, which that's not the case because we discuss everything. So I just went back to making more high probability trades off what I have learned from you and your courses, and that is starting to pan out much better. I'm not saying it. Ches' alert city texts me are pretty nice. So, but the problem with that is they're always on a 3-hour delay, because he's in California for some reason. So I had to go back to actually learning and watching the charts. And after I did that, my trading account's really starting to improve. I'm not losing any more money, which is, I'm still losing money, but I'm not getting these huge losses. I'm learning. every time I lose money, I learn more valuable lessons from those losses than I have ever before.
And I'm assuming you lose money at this point. It's controlled losses. It's losses within a framework of something much bigger. So it's not like it's just some sort of random loss. So of course you're going to lose. We're all going to lose. Ches loses. I lost. You lose. So losing is not the enemy in trading. It's random losing. It's letting losses expand into just pure bloodshed. That's the problem. So losses are not the issue. It's what type of losses. So correct me if I'm wrong, but it sounds like you are now taking losses in a very professional way, in a very disciplined way, and in a very controlled way. Is that a kind of a safe assumption there?
Oh yeah. Now I have more ninja trades than ever, which is awesome. I look at a ninja trade, which is just losing a little bit on a trade plan that did not work out, those are winning trades. I've
Absolutely.
had a few losing trades that something unexpected came up or it's jumped over my stop loss. Those were the bigger ones, but I've learned more on going back and doing. I had an ultra trade that was a beautiful setup, went wrong. It was all my fault. It had nothing to do with the trade.
And that's
plan.
what we're going to be talking about tonight, right?
Yeah, and so that one shook me to the core of what happened. And
watch this, John. Watch this business plug here. So if you want to hear about this ultra trade that John is hinting at right now, then hey, just join Clay Trainer University and you can listen to it in the webinar archive because all live webinars are recorded. So, and to think that John and I did not script that ahead of time, that is just we have become one now in terms of just growing the business. But in all seriousness, now you're like a hype man or something. I'm looking forward to tonight. I mean, it shook you to the core, so I can't wait to hear. Ches, are you? I'm genuinely
I'm excited when you use words like "shook me to the core." Yeah, it's gonna be good.
Yeah, so I can't wait to hear how all that went down.
It shook me to the core so bad. I went back and I spent all last week. I did two or three trades last week, at all. But normally I would do more than that. But I slowed way down. But it shook me to the core. I went back and went through your RVR, and I did that in a week. And you know how long an RVR course is.
I was going to say, holy smokes, man.
So I finished it up this morning, and so I mean I had to figure out where I went wrong, and so I found out where I went wrong, and that's where my turning points are.
Excellent. So yeah, I can't wait to hear about all that tonight. But I mean, looking at the time, I don't know where the time has gone, but I always like to ask this question. So what is your chart looking like? I mean, do you have indicators all over the place? But if I was sitting next to you right now and looking at a chart, what are you actually using on the chart?
Oh, volume is number one for me. Volume and then price action. And then it depends on my time frame. That's key right there. Time frame you got to pick first, and then the volume I look at, and then the price action.
I'm weeping over here. Just preach it, brother. Preach it. Absolutely.
So, but if I'm playing in something, if I'm playing in it for day trade, I'm going to go into the 2 minute. I'm going to look at that, and then. So, let me step back real quick if you mind.
Go for it.
I took the L2s, and I was confused as all get out from taking L2s after that. So I spent the last 2 Mondays for that just watching the time and sell and the trade flow. And after just watching that, I jumped in on a few, did not quite get it. And then on this last one I did, which was Regal, I did a very good win on that one. And it's because I took down my chart, I took off the volume, I took down the price action, and I had nothing up but the L2s. Because that's all you could go off of. You could not go off the price action. You could not go off the volume because it was all over the place. So, I mean, you can't use just one. Not one thing is the golden rule on figuring something out. I mean, you're teaching us all kinds of tools. And so we got to use all those tools in our basket to pull something out of the market. And so when I looked at those level 2s, I was still confused. And then I thought about how you were teaching it. If I looked at it as empty baskets and full baskets of apples, well, the empty baskets is the demand side, and the full baskets is the supply side. So once you figure that out, who's going to get filled first? Are these small empty baskets going to get filled first before that big empty basket's going to get filled first? And you can tell right where the supply and demand lines are without even looking at the chart. And you're in and out before those, you jump in before those guys get filled and out before those guys get filled. And that's where you can do it. So it's not just the price action. It's not just the L2s. It's getting to understand how all that works together and what type of trade plan and what type of time frame you're looking at. Because if I'm looking at it for a night, I look at the 30-minute chart. I look at the 4 and a 38 crossover, and I find that works very well.
And I was going to say, isn't that the beauty of the market, is trying to find and figure out, how to approach this or this outlook? It's always a continuous challenge. It's not something that ever gets kind of easier. Don't get me wrong. Things become habit and you become kind of like a robot, more or less. But at the same time, you're always kind of being a detective and figuring out, how to find that empty basket or that full basket. So yeah, kudos to you.
Chaz, you have a time machine, right?
I do have a time machine. I'd be happy to lend it to you too, John.
All right, yeah. So go, Chaz. The question is yours.
So if you were to take this time machine back and go back to, I'll let you dictate the time period. What's one piece of advice you would give yourself, knowing what you know now versus what you knew then?
It's just to take your time, guys. It'll come. If you got to have two things in learning this in this market. It's the time machine. If you can't go back and learn humility and discipline, you're not going to get there. So, you not just learn it, but you got to practice it. You got to practice it daily. You got to be disciplined. And you got to learn that. The sooner you learn that, the better off you are. And if you don't have humility in this market, it'll teach you to be humble quickly. And you need to practice it as well. Not just inside the market, but outside as well.
That's a beautiful answer. And just to tap on it again, losing is not the problem. Losing does not mean that you're a bad trader. Not at all. So you have to be humble enough. You have to, show humility to be able to admit, hey, you know what? I got a bad entry. Hey, I'm wrong. Let's cut the loss and move on. That's where humility comes in. That's why I love that word, because if you are not a humble person, if you are just to the point where I'm not wrong, or I don't want to be wrong, or I'm a competitive person, therefore I'm going to fight to the end, it just doesn't work out. You have to be humble enough to say, hey, I was wrong. Cut the loss, time to move on, because as John has already mentioned, there's opportunities around the corner, and there's never going to be a lack of opportunities. They're going to be out there, so it's not like this one trade has to, buy you a Lamborghini, because there's going to be plenty of other trades out there that'll buy you that Lamborghini over time. So very well said. Well,
let me hang on. Let me put this to a better perspective. If you don't have humility, you're not going to learn. You're not going to progress, because I have these voices in my head now that call out, and I call it my C calls, or my C screams, and it's my Clay, Ches, and Cubs call. And they yell at me, basically standing up, saying, "Hey, what are you, blank?" And so I think to myself, well, yeah, sometimes I am, because if I didn't have humility, I would not have listened to you guys so much, and I wouldn't have listened to the Cubs, and gotten back to what I needed to do was to learn what I did wrong, when I did it wrong, and how I did it wrong. If you don't have humility, you're not going to learn that.
That's very well said. And
and also podcasts, I've listened to all of them. There's a few I've gone back and listened to. There's two that I think everyone should listen to it once or twice over, and that's Stephen King's podcast and Sean's podcast. Stephen King he learned humility. Once he learned humility, he was able to go back and win. And you listen to Sean, you listen to the discipline part of it. Sean, it's a big deal. It was a big deal for Sean to lose $10, and I understand exactly where she came from. I living out of a car has not been a stranger to me. So losing money, it hurts. You learn a lot, but I'll never go back to where I was. So I even work harder now than I ever did on learning this stuff and getting my discipline down.
Excellent. And we will we'll link all those podcasts in the show notes. So if you're curious to want to go back to listen to those specific ones, then you can, like I said, just look at the show notes. Well, we got to wrap this thing up. What a great journey, but we're not quite done. Now we get into the serious questions. So I'm going to kick this party off. John, what is your favorite movie?
Well, I got two lines I go down. I go down my girls' line. I got to go see movies with them, which is like the last one we saw was The Secret Life of Pets and Frozen. But my favorite movie of all time is probably Saving Private Ryan for me. So
That's a good movie right there. It's a classic. What would you say is your favorite food and dessert?
well, it's not so much the favorite dinner, but bacon is probably my favorite. Because if you think about it, you got BLTs, you got bacon cheeseburgers, you got bacon wrapped fillets, you got bacon wrapped shrimp and scallops, and you got bacon crumbled over chicken marsala. I mean, it just goes with everything.
It does. And not that I was ever thinking that you could potentially be a communist, but now I know for sure John is not a communist if he believes bacon is, I mean, that's case closed. The jury is no longer out on that. And then what do you like to do for fun or hobbies?
Well, my hobby is I enjoy shooting and target practicing.
What do you like to shoot?
Yeah. And I got a good story about that to you too. I mean, it's just a hobby. It's fun. It's great. And then, so that's what I like to do on my spare time if I have any.
Like now, pistols?
Yeah, my pistols. I love shooting my Glock 19.
Hey, I'm gonna be I'm working on a video for that this week. That's a good gun.
Yeah, it's a great gun.
It's a great gun. We were not going to get sidetracked here, Ches.
Yeah, I'll keep you guys
back
off
on.
the gun podcast.
Get me back
here.
on the rails here.
John, what would you say are 3 words that should be associated with successful trading?
I was thinking about that earlier. And if you want to succeed at this, everyone says determined. I don't think it's so much being determined as it just being obsessed with it. I think a lot of us get determined, but we run out of money before we make it. So, but if you're obsessed with it, you'll figure out a way to get there. And you got to have, let's see, you got to have conviction in your plan. Every time you have a game plan or a trade plan out, you got to have conviction in it, either which way. And that's one of my notes here on my sticky notes that I have. You got to have conviction in every one of your plans, and you got to have a reset button. So if they don't work out, so what? You just get back in and go make some more money somewhere else.
I like that, a reset button. Just that's great. That's good
mental
stuff.
Reset button.
Yeah, a mental reset button. And that may not make sense if you're brand new to trading or have never made a trade, but yeah, once you get real money in the line and things don't quite work out and you got to take that loss, a mental reset button. Very well said. Well, hey, John, thank you so much for hanging out with us today.
Well, thank you, guys. It's been fun and real, and maybe we can do it again sometime once I really make my empire,
Well, when we'll do it sometime as you drive us around in your Lamborghini. So I think that'll work out fantastic.
I thought he was going to invite us to the yacht.
Well, you can drive us on the Lamborghini to the yacht. We'll do that.
For me, that never would happen. I'd buy a used car and give the rest of it away to charity. So I'm just different.
Well, hey, I'd say that's a good way to be different rather than. Never mind. I'm not going to get up on the soapbox. So you're baiting me, John.
You got to practice humility everywhere. So
yeah, you were baiting me. I'm not. I agree with you. I'll just leave it at that. So for you listeners out there, a few things before we all part ways. First, if you are listening on the website, then click that share button. Leave us comments. We do read them. If you're listening on iTunes or any of the other podcast players, click that subscribe button and leave us a rating, especially on iTunes. That really does help us out, helps us get our visibility out there. And finally, YouTube, if you're listening there, click that like button and check out the channel as a whole. A lot more other stuff there than just podcasts. As John had talked about, there's live trading videos. Those are a couple ones that he first saw. Chart analysis videos, quick tip videos, a good variety. So check out the channel and hopefully you decide to subscribe. So thank you again to John. Thank you again to all you listeners. We will see you back for the next episode.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.